What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, and I'm here to share my insights of the market with y'all to hopefully help y'all become better informed investors, man. Salute to y'all for pulling up. Man, we got some news to get into today. The regulators are trying to put the squeeze down on us here, y'all. So I want to read this article with y'all because I noticed a lot of people that are following me involved in the crypto space aren't keeping up with the news, outside of some of these smaller cap or altcoins that we deal with. Y'all have to pay attention to the overall market and different policies that are coming into place. So here's this article from Coinbase saying the unhosted crypto wallet rule is back. The rule was first proposed by a U.S. money laundering watchdog in late 2020. So here's a picture of Treasury Secretary Janet Yellen, and it says a controversial proposed rule that would enforce know your customer rules on unhosted or self-hosted crypto wallets may again be under consideration by the U.S. federal government. The rule was first proposed at the end of 2020 by the Financial Crimes Enforcement Network, FinCEN, the U.S. money laundering watchdog. If enacted, crypto exchanges would be required to collect names and home addresses among other personal details from anyone hoping to transfer cryptocurrencies to their own private wallets. Industry advocates said they were concerned that the rules might be impossible for certain wallets to comply with because they are not controlled by people and therefore are not tied to this personal information. Others were also concerned that the requirement might be overly burdensome for individuals to comply with. The rule was driven by then Treasury Secretary Steven Mnuchin rather than FinCEN itself. The original proposal was published on Treasury's website and not FinCEN's. The watchdog only posted the proposed rule when the comment period was extended. The Treasury Department, which is now overseen by Secretary Janet Yellen, revealed that the rule might be considered in this semi-annual agenda of regulations, set to be formally published in the Federal Register on January 31st. The agenda outlines priorities for the Treasury Department, but it does not indicate that the rules will for sure be implemented or that they will be implemented as is. Rather, the agenda is a tool that signals things the Treasury will work on over the next 6 months. FinCEN is proposing to amend the regulations implementing the Bank Secrecy Act to require banks and money services to submit reports, keep records, and verify the identity of customers in relation to transactions involving convertible virtual currency or digital assets with legal tender status, held in unhosted wallets or held in wallets hosted in a jurisdiction identified by FinCEN, the document said. So split rule. The proposed rule originally had an unusual short 15-day comment period, further stirring controversy among industry advocates. Typically, comment periods are between 30 and 90 days, though some rules may have 120-day comment periods. In public notices, FinCEN twice extended the comment period, first another 15 days and later for a further 60 days. In that first extension, FinCEN treated the rules provision as two separate issues. One of these provisions sought to impose currency transaction report rules on crypto transactions to unhosted wallets. So those are wallets, for example, like Trust Wallet, Bitmart, things like that. Financial and a ton of other wallets as well. Financial institutions currently file CTRs for customers who transact with over 10,000 in a single day. The personal data rule, referred to as the counterparty data collection rule, would apply to customers transferring over 3,000 in crypto per day to private wallets, y'all. Come on, we know a lot of people, transfer way more than 3,000 per day to private wallets. So it is this second rule which led to industry backlash, including several thousand comments filed as a response. FinCEN may need to issue a new comment period to address these responses before implementing the counterparty data collection rule. A FinCEN spokesperson did not immediately return a request for comment on whether the agency is considering the overall rule or the provisions individually. However, a link on the Federal Register page leads to the original proposed rule from December 23rd, 2020. Defining money. The Federal Reserve and FinCEN also plan to clarify the meaning of money under the Bank Secrecy Act as it pertains to digital assets, ensuring that digital asset transactions are subject to the same BSA rules that their fiat counterparts may be. The agencies intend that the revised proposal will ensure that rules apply to domestic and cross-border transactions involving convertible virtual currency, which is a medium of exchange such as cryptocurrency that either has an equivalent value as currency or acts as a suitable substitute for currency, but lacks legal tender status. This document said, further, the BSA rules will also apply to any digital asset transactions that have legal tender status, the document said. So right now, they want to get, deep into everyone's business, already, I don't think this will work because, it's too decentralized, so to force some of these, institutions like this article said that aren't even ran by humans to try to collect KYC data, which is know your customer. That's, being able to pinpoint who this person is, having their social security number on file or whatever it is in your country. But here they want social security numbers, addresses, phone numbers, identification cards, ID numbers. They want these things to be able to tax everyone, which, I'm all for, paying taxes, but I think this is just a little bit, too overreaching into, out of their jurisdiction. One, they want to basically not give the full, they want to act like cryptocurrency is kind of, not legit in a way, but then they want to come, and, meddle in it. I just don't like that. I hopefully, this won't affect things too much if it does go through, but I just think this is something that we should be aware of and, keeping our eyes on just to, see what happens, because it can affect a lot of our reporting statuses when it comes to cryptocurrency, because I know we be transferring a lot of money, more than 3,000. So if we would have to start reporting that can make things a lot more complicated. So let's see. Shiba Inu right now, the price is sitting at 21.55. We are up almost 1% for the day. It's basically just doing nothing, trading sideways right now. But I told y'all, that is a good sign. That's a good sign that we're likely to see some major movement happen soon. Now, I believe it's going to push to the upside, and we're going to, close these levels here. So some people are going to be disappointed that they weren't buying, in this range. This is reminding me of like when we were over here in the 13s. When we went over when we were in this 13 range, and then the price pushed right up into those to the 19, 16 ranges like that, and everything became expensive, and a lot of people were like, wish we would have got in. It's looking like that right now. It's looking like we found a support right at that previous level. Let's zoom in here, and so y'all can actually look at these candles and see what the chart is telling us, because sometimes we can just look back and see where did it perfectly fall to. So this candle, the lowest point, fell exactly to the bottom of this candle right here on October 6th at that 17, or what is that? Zoom in a little bit more so we can get a more accurate number. So right at that 1681 level. So that tells us that that is a key support level. So if you didn't go long right there, you missed out on, let's see, what percentage is that so far? This is why it's important to buy the dip. I'm about to show y'all right now. So already, if you would have bought the dip from the lowest point, those people are already up 26.95% on their money. Those people have almost seen a 30% gain on their money already. They don't even have to wait for, the threes to come back in, the fours to come back in, fives. I know a lot of y'all are down, very far, and all you had to do was buy the dip and, wait till prices return beyond that point. If you're looking at the chart to buy key support levels, shout out to y'all reaching out to the channel. I see y'all. We'll tap in with y'all as soon as this video is over with. But key support levels are where you see the wicks come down to. Look at where the wicks come down to, and they find support here. So here underneath the real body of these two candles, the wicks of these two candles, you see we found support here in this area, support in this area. You look for the price to fall back along those key areas. And when it hits those key areas, So here would have been a good time to buy. You notice a lot of people bought right here. That's how the price pushed up here. All they did was look left in the chart and say, hey, this was an area where we found some previous resistance. So they used that previous resistance as a key to buy for support. And you know, it did go up a little bit. Those people possibly made some gains here and took profit, and then the price started to move back down. You don't always have to wait for, you know, the price to go to all-time highs to make money. You have to buy the dip. This is not financial advice. I'm not telling you that you have to, but I'm telling you how to get out of the hole or how to make gains faster versus just waiting on a new all-time high. So I highly recommend y'all that don't understand technical analysis yet to reach out to get my technical analysis course. I got a course, you know, a few hours long, breaking down, you know, technical analysis, teaching you how to understand the chart, teaching you how to understand candlesticks, teaching you how to understand chart patterns, you know, different things like that. Also how to use indicators and, you know, make better informed decisions based on all this information together. So if you're interested in that and you're at the point where you've invested more than $1,000 into the markets and you're ready to take it to the next level, reach out to me via email, DecemberDeMarco@gmail.com. I got y'all. Appreciate y'all for pulling up, and that's all we got for this video. And excuse the lighting behind me, y'all, is very bright. So I got bright lights in front of me right now, and it's still not even doing any justice because of how bright it is behind me. So y'all just got to bear with me. I'll figure it out. I might even add, I'm still waiting on my desk to come in, but I might add another area where I can actually face the light versus having the light behind me like this. So that's all we got, man.